with us today, and great to have you. And merci beaucoup. And we look forward to see you in the flesh in Paris in the coming months when the COVID situation improves. Merci beaucoup and à très bientôt. And without further ado, we're moving now to Torbjorn Hanmark in Stockholm. He's joining us from AP3, the Swedish third public pension fund. And Olivier, if you could bring Torbjorn on the main screen. And without further ado, we wanted to have Torbjorn today for two reasons. He is an asset allocation expert and a global one in his own right, but he's also rooted in Scandinavia. So we're going to ask him a few questions, both about the global remit and also what has happened in Scandinavia since the start of the COVID crisis. So basically, once again, delighted to have you. So first question, in your personal opinion, if I had to ask you, what has changed in the past 6-7 months since COVID came?
Good afternoon, Nick, and good morning, America. Thanks for choosing the 3 o'clock time when my 12-year-old is coming home with our friends screaming around the house. If you hear them more than me, you have to let me know. What's changed? Well, as an investor, I believe things are surprisingly the same, and I guess you can relate to that in the sense that when this really started to accelerate 6 months ago in financial markets, you sort of remind yourself of previous crises and quarters and years of market turmoil and uncertainty, and also quarters and years of new political and monetary policy initiatives to stem the bad part of the cycle, and maybe we still have that ahead of us. But what's different this time is, of course, how quickly financial markets have recovered, at least to previous price levels. I do realize that some things are very different also in markets, but I guess most on your mind now is how sustainable is this market development and how uncertain is the actual crisis going forward.
Right. And so in terms of the nitty-gritty of your asset allocation, did something change in the past 6-7 months in the way you allocate? Or is it too early because you have a more long-term view of allocation?
No, your point on long-term is correct. I would have expected more emergencies to pop up already in, for example, our private holdings, both property companies and private equity companies, but we haven't seen those yet. And I guess that's a combination of very strong policy responses and that the economy is, at least in Northern Europe, is still tagging along to some degree, even if things are very different also in Stockholm. You should not exaggerate how different Stockholm has been from the rest of Europe or North America, even if the rumor says otherwise, I would say. We were lucky to actually implement a change in our portfolio just going into the crisis. And that was a follow-up to change in regulation January 1st, 2019, which allowed us to decrease our bond holdings and go more into private investments. And we had really prepared to increase our overall portfolio risk as a result of that. And of course, the timing for that was good. So actually we were more or less automatically adjusting to a new policy benchmark when this happened, and in the very short term we were lucky in being very proactive during March and April.
And what is your current exposure roughly to private equity, venture capital, and infrastructure approximately?
Our overall label is for that is our private investments, and we are about 5-7% into private equity. We are about close to 15% into property, 5% into infrastructure, and a small portion into timberland.
Okay, interesting. And from that perspective, regarding the private equity, property, infrastructure investment, do you have some kind of home bias, or have you heard, because of the crisis, because the economy is slowing down, more and more policymakers and perhaps board members clamoring for more local investment as opposed to overseas?
Our property holdings are very much in Sweden, and that's because we do most of those investments through our own companies, fully or partly owned companies. And those companies are also invested in our neighboring countries and Germany, for example. Overall, there is a home bias, more so in the private investment part of the portfolio. There is absolutely no shift at the moment. When it comes to private equity, that's 50-50 between Europe and North America, and not much of a policy change there either. You might be alluding to a comment I made that I think many investors will be more, compared to the past 20 years, I think many investors will be more comfortable to allocate assets closer to home over the next, say, 5 to 10 years compared to before. So I think there's an ongoing shift there, which could be bad news for some capital-starved countries, for example.
Right. And because you look at all the asset classes, I guess Eurovision is holistic, as we say in French or Greek or whatever. and until recently, sadly, that holistic, vision was missing. People focused solely on equity or fixed income. So people were really obsessed with their corner of the capital structure or their corner of the geography of the market. And the beauty of being a generalist like you is that, by definition, you have to look as a discipline every day at all asset classes, which perhaps allows you to capture things that someone looking only at equities or only at bonds, cannot see that clearly. So from that perspective, what have you captured in essence, or have you captured anything unusual in the past, few weeks and months? For example, are you seeing things that are troubling you when it comes to, monetary policy and currency, potential currency distortions and excessive interest rate distortions? Does it keep you, awake at night, let's say?
I think going forward will be extremely important to be aware of where your money is invested and which currency your assets are invested in. And that's partly to do what I said before. I think global capital flows will start to shift, even if it's extremely slowly. I also, to some degree, think that monetary policy will vary between regions, maybe to a larger degree than we've seen in the past. So that's a forward-looking aspect of it all. You need to be very aware of where your assets are and how you manage your currency exposure. What have we experienced this year? I think we have experienced a huge shift down in primarily US interest rates, and that really stands out. We haven't seen anything like that in kind of downshift of European rates or Swedish rates or Chinese rates. On the contrary, there are several significant bond markets which are today seeing higher bond yields than a year ago. And that's of course very, very different in the US. And that's basically meant that US rates have converged down to the rest of the world. So that's one observation. The rate levels are very much more similar today than they were a year ago. That is probably part of why the dollar is starting to weaken and so on. But I think even more important is that other bond yields are higher today than a year ago. That's a very significant observation, I think.
Right. That's great. Thank you very much for these comments. And we don't want to bother you anymore, because I can hear the clamors, not of the board members, but I can hear the clamors of your children, which will allow me to make a transition to the next session, which is an extension of yours, because basically we're going to speak now about the sustainability of pensions, which relies to a large extent upon demographic dynamism. So we want to thank you not only for your wise wisdoms today, but also for the fact that you have a dynamic family, and we can hear them now, your young children coming back home, so it's great. Merci also, beyond what you're doing for your own AP3 pension fund, merci for strengthening the demographic pyramid of the European Union, and we're delighted to have you today. And like I said earlier, when that whole COVID situation improves,